Over a decade after it was enacted into law, the Real Estate Investment Trust has finally taken off. With pertinent regulations signed on January 20, 2020. REIT listings are essential to the development of the Philippine capital market and has numerous benefits to its stakeholders.
This will open up attractive investment opportunities and broaden access to the capital market. This will allow big players in the real estate business to raise more capital to further invest in our country, a win-win situation for all.
The PSE had its first REIT listing in August 2020.
I wish to congratulate REIT Inc. for being the first company to offer and list REITs. To be 2 times oversubscribed during these difficult times is a testament not only to the attractiveness and quality of this product, but also to the trust and confidence of investors in the sterling reputation of its sponsor, Ayala Land Inc. Peer companies in the property sector will surely be monitoring the performance of REIT, including its compliance with the rules and regulations unique to REITs. I am sure that REIT will prove to be an outstanding model for REIT companies. I am also optimistic that the warm reception to REIT's offering will encourage and pave the way for other property firms to list REITs in the PSE.
Be part in the development of the capital market and contribute to the growth of our economy through REIT listing. Know more about REITs by joining the REIT SMART webinar on November 17. For more information, you may email us at marketingservices@pse.com.ph.
Good afternoon and welcome to the first PSE REIT Smart webinar for issuers entitled Shaping the Philippine REIT Market. I am Pauline Vilvestre, Head of the Marketing Services Department of the Philippine Stock Exchange and your host for today's event. The REIT Smart series is a 2-part learning series designed to equip potential REIT issuers with a better understanding of the intricacies of the real estate investment trust. We hope that through this webinar series, companies will be able to consider REIT listing as a strategic option in your plans to accelerate post-pandemic recovery and expansion initiatives. Today, the PSE will also introduce the PSE Listing Assistance Program developed to assist IPO and REIT listing applicants to fast-track their company's growth through listing. This afternoon promises to be very interesting and informative for everyone, as we will be joined by distinguished executives from Bank of America, REIT Inc., and the Philippine Stock Exchange to share with us their insights and experience in real estate investment trust, a brand new asset class in the Philippines, but something that is already widely known in many global markets. To begin our session, I will now turn you over to the PSE President, Ramon Monzon, for his opening remarks.
Good afternoon, everyone. Welcome to the first installment of the REIT SMART series. Unfortunately, because of the pandemic, this is only the second time this year that PSE is able to engage with our listed companies in our informational and developmental activities. So I'm glad that you are able to join us today. As you may know, we started the year on a very upbeat mood. It was just 20 days into a brand new year when we had the signing ceremony with the Department of Finance, Securities and Exchange Commission, and the Bureau of Internal Revenue for the amended implementing rules and regulations for real estate investment trusts. After 10 years, REITs would finally see the light of day. We had high hopes then that we would see at least 3 REIT listings for the year. Then the COVID-19 pandemic came and wreaked havoc on the global economy, including ours. Nevertheless, even in the midst of the pandemic, we were fortunate to have the first REIT listing on August 13 by one of the country's biggest property developers at that. and whose president will be one of our resort speakers later. This milestone event proved that, pandemic or not, investors will support companies they find value in. I understand there is a good mix of listed companies joining us in this webinar, both directly involved in the property sector and those engaged in other businesses. I suppose most of you want to know, is it really viable to list REITs at this time? There's a quote attributed to Albert Einstein that goes, "In the midst of every crisis lies great opportunity." Opportunities in REITs do not merely lie in office buildings, malls, hotels, and other hospitality developments. This pandemic reshaped how the world lives. Given what we call the new normal, there has been increasing demand for data centers, storage facilities, hospitals, residential projects outside city centers, among others. The now and the future of REITs will always be viable if you have a good combination of properties in your portfolio. The market capitalization of REITs in Singapore Exchange is a staggering $65.6 billion. For the Stock Exchange of Thailand, the market value of their REITs is $6.86 billion. And for Bursa Malaysia, $5.96 billion. Meanwhile, our one and only REIT so far has a market cap of US $0.54 billion. So it is clear that there is this big potential for growth in REITs in the Philippine market. Our team prepared an interesting lineup of discussions and invited notable resource persons who can explain very well what you need to know about REITs. On behalf of the PSE, I wish to thank Martin Sia of Bank of America Singapore and Carol Mills, President of REIT Inc., for agreeing to share their expertise and experience with you. This session is just an introduction to REITs. If there are further inquiries after today, please do not hesitate to reach out to our marketing services team. Again, thank you for joining this webinar, and I wish you all a productive afternoon.
I am sure a lot of you are looking forward to hearing our next speaker, who will be sharing with us her company's journey to successfully pioneering the first REIT listing in the Philippines. But before I introduce her, let's all watch the short video presentation. Mills is Vice President of Ayala Land Inc. and President and CEO of REIT Inc., the first Philippine real estate investment trust. She heads Ayala Land Offices, the office leasing and development arm of Ayala Land since 2013. Ayala Land Offices owns and manages 1.2 million square meters of leasable space across 69 properties in the Philippines. Prior to this role, she headed the business and project development for Ayala Malls from 2008 to 2013. She has been with the company for 23 years, holding various board positions and several Ayala Land property and subsidiary companies. Carol holds a master's in business administration from the Amos Stock School of Business at Dormont College and graduated magna cum laude from the University of the Philippines, Diliman, with a degree in business administration. She is a member of the IT Business and Process Association of the Philippines, a wife and mother of 3 children. Let us learn and take inspiration as we listen to the story and the growth plans of the first Philippine REIT. Let's all welcome REIT President Carol Mills.
Good afternoon, everyone. On behalf of Ayala Land and REIT, thank you to the Philippine Stock Exchange for inviting me to speak before you this afternoon. I've actually had the honor and the pleasure of working with the PSE on 2 significant occasions. First, as a developer 8 years ago, when we broke ground and built the new home of the stock exchange in BGC, noteworthy as it physically unified the Makati and Ortigas trading floors into a single new landmark. And second, of course, is for the listing of the first Philippine REIT, REIT. 11 years after the REIT law was enacted, it's a significant milestone in our capital markets today. Thank you to PSE President Mon Monson and PSE COO Attorney Roel de Fran for being instrumental in bringing these 2 events to fruition. The PSE has always been a symbol of commerce and financial progress in our country, and through your efforts of integrating the exchanges and now paving the way for more investment products like the REIT, hand in hand we are developing a more robust capital market. We are also truly grateful to the DOF and the SEC for recognizing how important REITs are in driving the Philippine economy. Ayala Land, along with other developers, are now pursuing the REIT, and it's our desire that more REITs follow and together be recognized in the Asia-Pacific market. And so with that, our journey as the first REIT has actually just begun. I'd like to start by highlighting the fundamental values of a Philippine REIT. We're all knowledgeable about REITs, but perhaps many undermine the most intrinsic value of a Philippine REIT beyond monetary yields. When REIT rang the bell, our Honorable DOF Secretary Carlos Dominguez, in his keynote message, referred to REITs as a powerful financial concept, a new asset class focusing on income-generating real estate, providing a positive multiplier effect as funds raised from REITs will stay within the economy and are reinvested exclusively in the Philippines. Thus, REITs could stimulate demand and create much-needed new jobs. The listing of REITs create an opportunity for small investors to participate in real estate for greater inclusiveness. REITs can be likened to the idea of bayanihan. Congress passed the Bayanihan to Heal or Recover as One Act to revitalize the country's growth. And we often hear of the term bayanihan to connote the support for local industries. In the context of the local capital markets, a Philippine REIT aptly demonstrates this. There is perhaps no other stock out there where, by law, proceeds raised from the IPO must be reinvested in our country within a year. Unlike international REITs, this is actually unique in the Philippines. The developer sponsor has an undertaking to reinvest the proceeds of a sale of an asset to the REIT in the Philippines within a year. So clearly, when you invest in REITs, whether it's a REIT or future REITs in the Philippines, you are investing for our country immediately for today, not later. And secondly, in the spirit of bayanihan, with REITs in place, ownership of real estate is now democratized and made available to more Filipinos. The general public now has the opportunity to own commercial real estate that otherwise would be too expensive, if not impossible, for ordinary individuals to own. In the case of a REIT, an ordinary citizen can now own a piece of a Makati building, take part in its income, and ride with its growth over time. So now there's a broader menu of investments. You have stocks, fixed income instruments, properties, and now a REIT, which is somehow a combination of the first three. So REITs democratize and empower more Filipinos to choose a suitable investment for them in our domestic market. Lastly, being a commercial REIT, investing in a REIT is an investment in a company that promotes Filipino employment. A REIT's properties are mostly office buildings, leased primarily to BPOs. And we know that BPOs are one of the highest employment generators in the country today. BPOs employ 1.3 million direct jobs and almost 4 million counting indirect jobs. We praise many heroes of today, the health workers, the service providers, many of whom did not stop working at the risk of even their own health. But let's not forget the Filipino BPO worker who themselves have not stopped working in order to provide global services throughout the pandemic. BPOs are the essential back office support for many global companies in varying functions that cannot stop even during a pandemic. IT support, customer service, logistics, healthcare, insurance, banking, accounting, HR services, these are all done by BPOs here. Many of the large global companies, Concentrix, Teleperformance, Oracle, TELUS, even some tech companies like Google and Amazon count on the efficiency of the Filipino BPO worker running their global systems behind the scenes. And a REIT leases primarily to these types of BPOs, and investing in a company such as a REIT help promote the livelihood of many jobs in the country. So now a REIT's journey as the first Philippine REIT. Being the first sometimes isn't easy. Many developers, including ourselves, looked at this for over 11 years, tried to be REIT ready, but nobody was able to move forward. The 67% MPO for one was a red herring. For Ali, it wasn't until 2 years ago, in around August of 2018, exactly 2 years before we listed, that we revisited REITs again. At the time, the train bill was passed and alluded to VAT-exempt transfers to the REIT pursuant to the tax code. At the same time, in 2018, Ali's commercial leasing businesses, our offices, malls, and hotels, have significantly ramped up, and capital regeneration and recycling would be key to growing the leasing business model to the next level. And so in August of 2018, Ali took that big, bold step to test the REIT under an MPO of 67%. Market was prime. We had completed a new building in Makati, Ayala North Exchange, what you see here in my background. That, along with another building, Solaris, were housed under an SPV, Juan de la Rosa property, and we decided to start with that. Albeit small, we felt it was a good enough start to seed and test the REIT in the local market and grow it as we go. In the next 12 months that followed, in 2019, we worked intensely on a REIT structure and prospectus. We set up our management companies. We appointed our independent directors. We engaged our underwriters, external counsels, auditors, appraisers. We put together a competent team to pioneer the first REIT. We also engaged an international counsel, although we did not intend to do a foreign offer yet at the time. We wanted to make sure that we would comply with international standards. As we worked on a REIT's filing last year, many rules were evolving simultaneously. One can only imagine the many changes that we had to do. For example, we structured and defined the independence of our management companies, trying to balance that expertise and control along with its fiduciary role to public stakeholders. And last year, the DOF was considering a reversion of the MPO from 67% back to 33%. That was a prime mover, but with that, we also had to step back, redo a REIT structure, resize it, add properties, and so our timelines reset, but well assured that we could finally leap forward as regulations were finally in place. So 2020 came, In January of this year, the new IRR was released, the PSE listing rules, the BIR regulations, and since we did a lot of our prep work last year, we immediately got to file with the SEC and we were set to IPO by March. Everything was done until COVID happened. March 16, the city was locked down, the world came to a halt, and inevitably so did we. When we thought back then that the law was beyond our control, an unexpected pandemic was even a bigger unknown. We waited a couple of months, setting us back another quarter, but we did not shelve our plans. Instead, we watched the industry closely, we stayed in touch with our tenants, we understood their operations, and more importantly, we kept all our buildings open and safe throughout. So by around June, we realized there was a silver lining in office properties. Unlike the rest of the world, there was a realization that the Philippine office sector was actually a bright spot in this pandemic because primarily our locators, our BPOs, as described earlier, proved to be essential all throughout. In June of 2020, we proceeded with REIT. We opened it to both local and foreign investors to ensure that future liquidity. We did a marathon of virtual roadshows, 10 to 12 virtual meetings a day between Singapore, Hong Kong, and Manila. Unconventional, but quite promising. And in the end, we concluded our 500 million share offer, twice oversubscribed. So at this point, let me talk a bit about the resiliency of REIT and why, despite COVID, we proceeded with the IPO. REIT's properties remained open from the start of the lockdown in March up to today. Our office locators are operating 24/7 as these are BPO companies, combining on-site and off-site operations. Leases were in place, rents were paid and collected. We have a hotel component in one of our buildings, but this is under a fixed lease with Ayala Seda Hotel and not subject to any income or occupancy volatility for REIT. And the retail is only a small component, about 6% of our total portfolio, consisting of very basic and essential stores, serving office workers and residents nearby. And most of these stores were operating. So the resiliency of REIT was actually tested and proven. Its financial profitability sustained, the company's fundamentals solidly in place. The buildings are fully occupied with long-term leases averaging 6 years, no significant expirations in the next couple of years, and all buildings in prime locations in Makati are leased to top global and local companies in very resilient industries, BPOs, healthcare, banking, insurance, and IT. We particularly chose Makati assets as these are familiar to our investors. And we did not choose properties with POGO tenants because of the uncertainties in that sector. So REIT proved to be strong and compelling despite the crisis. And as planned, last September, we declared our first quarterly dividends for the first half of the year. And we had just released also our third quarter earnings results, all consistent with our REIT plan. And our next dividend schedule is in December, right in time for Christmas. So true to design, REIT is a defensive stock, especially in a crisis, an ideal instrument when interest rates are low and inflation hedged because of built-in escalations. Risk is managed because of portfolio and tenant diversification. And now REITs are also an accredited asset under the revised insurance code. At the same time, REITs can also be viewed as a growth stock. REIT has a large opportunity to grow. Currently, with no debt, REIT can leverage, acquire more assets while preserving and even increasing dividends to our shareholders as we expand our portfolio. And last and certainly not the least, behind REIT is a strong and committed sponsor, which is Ayala Land. We have a platform in place for growing REIT. 1.2 million square meters of office properties are opportunities for REIT in the short to medium term. And beyond that, 12,000 hectares of land bank provides long-term opportunities for REIT as eventually these get built up. Our executives and management team here has a collective experience of over 80 years of track record with the company and in real estate, ensuring that REIT will have the same values, professionalism, and expertise as Ayala Land. So that's the story of REIT, a compelling story of resilience, soundness, and path for growth. And more than this, REIT is a signal of Ayala Land's commitment and confidence in our country as it reinvests in our economy. So we listed on August 13, 2020, and for that, we will remember this year for the right reasons. We stood at the trading floor. It was a 2-year-long journey for us, but an 11-year journey for the industry. Definitely worth the wait, the long hours, the challenges of listing the first week. But this is really just the beginning of an even longer journey for not just for REIT, but for REITs to flourish in our country. We are actually very excited on the growth prospects for REIT. A month after we listed, we had already acquired our first property in Cebu, which we believe is very strategic for REIT. Most BPOs in Manila expand in Cebu. And we also recently announced an upcoming acquisition of the 30th commercial development in the Pasig area, consisting mainly of an office building leased predominantly to BPOs. And mindful of occupancy risk, the retail podium will be leased to Ayala Land under a fixed rent basis. And since the acquisition is fully funded by debt, this new asset will add to the dividends to our shareholders on top of what they are already currently receiving from the existing 4 properties of REIT. And given the low interest today, the acquisition of the 30th will yield accretively to our investors. And barely 3 months since we listed, REIT's financials are on track with a strong balance sheet and now setting the stage for our portfolio to grow from 153 to 246,000 square meters. And as we head towards 2021, we envision to grow this further with more acquisitions. As for Philippine REITs, developers and market players should really take a long-term perspective on this. A REIT should not be viewed merely as a vehicle to liquidate assets or exploit tax advantages. Those are just consequences of the purpose for which REITs are created. REITs are designed to promote and spur development, broaden investments for the public, and regenerate capital for our economy. The real test of a successful REIT goes way beyond an IPO. It is one that has the capacity to grow from its constantly increasing income as well as new acquisition. And that's the attraction of a well-designed REIT, an income stream like bonds as well as capital appreciation like equities. But this does not happen overnight, and like any good real estate, it's suited for investors with a long-term view. When executed the way REITs should be, we are confident that the Philippines can be weighted alongside REITs in Asia. REITs have been around in the US for 60 years, in Singapore for 20 years, and in Hong Kong for 17 years. The Philippines is so far the last in the region to launch a REIT, after Thailand and after India, which launched last year. If you look at India, its REIT law was just passed 6 years ago, much later than the Philippines, but now heading towards its 3rd REIT following Embassy and Mindscape. Thailand enacted REITs not close to the time the Philippines enacted its REIT law, but already has 4 REITs in place with a market cap of over $7 billion US. That despite Thailand having a much smaller office supply than the Philippines. So we really should not be lagging far behind our peers. We have a total office stock of over 14 million square meters. Compare that with Hong Kong and Singapore of about 9 million and 3 million square meters, but have a REIT market cap of close to $100 billion US. Of course, property values there are much higher than Manila, but the sheer amount of our office stock here indicates the total universe of REITable assets here, and this does not even include the malls yet. So we could very well have the REIT potential of perhaps the size of Malaysia or Thailand, or even more. Time has proven in many countries that REITs are the engines to sustain a long-term economic growth and have survived major economic downturns. In more advanced countries, REITs are not confined to just traditional real estate. Other emerging assets, hospitals, data centers, toll roads, utility providers are considered REITable. China now is on the cusp of launching series focused on infrastructure, logistics, and data centers. The path towards a redevelopment will really entail a lot of work from us developers, the capital markets, the government, the Philippine Stock Exchange, industry organizations. We need the concerted effort from these stakeholders to promote REITs, do investor education, refine regulations, and make this more available to more Filipinos, unlock untapped opportunities to fuel the country's growth. Sam Zell, chairman of Equity Group Investments, owning some of the largest US REITs, once said, "The petroleum of the real estate industry is capital." With that said, I conclude this journey to the first Philippine REIT is not over, and it's not ours alone. Thank you again to the PSE for this great opportunity to talk about REITs, and we look forward to building the future of Philippine REITs with you. A pleasant afternoon to all. Thank you.
Thank you, Carol, for taking us through our REIT's journey and REIT's story. After listening to the two presentations, many of you might be asking, so how does a REIT listing actually work? And where do I begin the journey? Our next speaker will discuss the finer details on how a REIT listing can be successfully achieved. Attorney Roel Arco Refran is the Chief Operating Officer of the Philippine Stock Exchange, Inc. He chairs the Capital Markets Development Committee of Philippine Chamber of Commerce and Industry. Attorney Refran is a professor of law at Ateneo de Manila University. He was awarded the 2014 Distinguished Alumni Award by the University of the Philippines Virata School of Business, where he is a professional lecturer for the MS Finance program. Attorney Refran is also an adjunct faculty at the Asian Institute of Management. Attorney Refran holds an MBA from Emory University's Quezada Business School in the USA, where he was a Fulbright Scholar. While at Emory University, Attorney Roel worked at the Emory Center for Alternative Investments, where he was involved in policy formulation with regards to private equity, hedge funds, venture capital, and other alternative investments.
Good afternoon, everyone. And it's a pleasure for us to be hosting this event. Thank you again to our speakers from Bank of America as well as from REIT. At this juncture, I would like to give you a bird's eye view of the regulatory requirements whenever we talk about a REIT listing in the Philippine Stock Exchange. For our presentation, we would have three parts. Number one is for us to understand REITs from the perspective of Republic Act 9856, as well as the implementing rules and regulations of Republic Act 9856. And secondly, the benefits of REIT listing pursuant to our framework, not just the SEC framework, but also the Philippine Stock Exchange framework, as well as the more important considerations in a big deal, which would be the tax implications pursuant to the Bureau of Internal Revenue regulations. And finally, we would also have a recap of the salient regulatory requirements that a deal team should be mindful of whenever they are structuring an REIT public offering. So with these three, we hope we'll be able to give you a good working knowledge of the nuts and bolts of a REIT listing. Now, what is again an REIT provided for under Republic Act number 9856 or the REIT Act of 2009, which, by the way, as a footnote, was actually not signed by then President Gloria Macapagal Arroyo into law. It is one of the rare laws which actually lapsed into law, primarily because there were tax benefits that at that point, the executive department were also thinking of how they could recoup those tax benefits given to the private sector. And 11 years later, as we saw earlier, in 2020, January of this year, we were able to finally resolve those tax issues. And again, going back to the basic concept of an REIT, is actually a stock corporation established principally for the purpose of owning income-generating real estate assets. While we use the term trust whenever we talk of an REIT, it's a real estate investment trust. By law and by regulation, it's actually structured as a stock corporation, and it is not the trust concept that we have in this market pertaining to the trustee-trustor relationship under contractual provisions. So bear that in mind, that an REIT is structured as a stock corporation, although it's called a trust. An REIT security would pertain to equity securities, which generally possess voting rights, dividend rights, and such other rights under the revised corporation code. Now, some specific characteristics with respect to the entity level, that is the real estate investment trust, that we will also go and discuss in a few slides, would be flashed on the screen. For example, the dividend declaration requirement is explicitly provided for, not just in the law, but as well repeated in the implementing rules and regulations, as well as in their PSE listing rules. There would be grave consequences. There would be potential delisting scenarios, as well as tax assessments, if the requirement of the 90% dividend declaration is not complied with. And again, this is going into the very core concept of an REIT, which is really a yields instrument. People invest in an REIT because they expect to derive returns by way of dividends. Therefore, the REIT law, when it was enacted, did put that in very primordial emphasis to require that at least 90% of the distributable income of the REIT has to be declared as dividends on an annual basis. There are also requirements with respect to the other cast of characters pertaining to the fund manager, pertaining to the property manager, as well as the property valuer. We'll touch on those three participants later on. Now, there's also a requirement with respect to the asset portfolio. At least 75% of the deposited property of the REIT must be invested in income-generating real estate or consist of income-generating real estate. There's also a maximum gearing limit or a leverage limit, as we call it, 35%, as well as a public ownership requirement. At least upon and after listing, must have at least 1,000 public shareholders with 50 shares each, who in the aggregate own at least 1/3 of the outstanding shares of the REIT. And as many of you may know, this was where we did have a long regulatory impasse, primarily because while the law provided for a very clear 1/3 public ownership requirement, there were regulations that were issued that increased the public ownership requirement to the point that sponsors and promoters did not see the viability of doing an REIT in divesting more than 1/3 control of the corporation. Be that as it may, this issue has already been resolved in not just the implementing rules and regulations of the Securities and Exchange Commission, but also in the appropriate revenue regulations of the Bureau of Internal Revenue. Benefits of a REIT listing to the issuer. Well, other than the access to capital, as I mentioned earlier, there are substantial tax benefits. The very concept of a REIT in other markets would probably evoke concepts such as a pass-through entity. A pass-through entity in other markets in the sense that the REIT at the entity level is not being taxed, but the investors, as and when they receive the dividends, are being taxed. In the Philippines, when we were drafting the law, so we were very active in the technical working group. This was back in 2007 all the way to 2009. We adopted a hybrid concept in the sense that the REIT will be taxed at the entity level, but there would be additional deductions by way of the dividends that have been actually distributed to the shareholders. And so the REIT can actually avail of additional deduction for tax purposes, which ordinarily corporations cannot avail of, and these pertain to the dividend declarations. Lower creditable withholding tax rate on the rental income received by the REIT is again another benefit. The withholding tax that's applicable is 1% compared to the general withholding tax of 5% whenever you look at rental fees or rental income. Third benefit is that the no IPO tax benefit, although you might say that the Bayanihan to Recover as One Act, which took effect September 15 of 2020, also removed altogether the initial public offering tax. But back in 2009, Republic Act 9856 already provided that an REIT IPO will not attract an IPO tax. Number 4, tax benefit pertains to the transfer of property to an REIT pursuant to the provisions of the National Internal Revenue Code. For advisors as well as for lawyers, they would always consider whether Section 40C2 of the tax code can be invoked, not just because it results in a income tax deferral, but also for value-added tax purposes. A REIT vehicle, which will do a public offering pursuant to the regulations, not only may enjoy exemption under Section 40C2, which pertains to the control being obtained because of a sponsor contributing real estate into the REIT vehicle, but also exemption from the value-added tax. So exemption at the point of contribution from income tax, plus exemption from value-added tax, because ordinarily the value-added tax will be imposed on the contribution by the sponsor. So again, this is very clear to be part of the benefits for an REIT listing. And finally, there is a very substantial discount on the documentary stamp tax on the transfer of real properties to the REIT to the extent of 50%. So you don't have to pay the full amount of the documentary stamp tax on the sale or the transfer of real property to the REIT, but the law provides for a 50% discount. Other benefits to issuers would pertain to having a market-driven price. That would also pertain to your market capitalization being reflective of all additional available information as well as the track record of the company. Corporate governance requirements would also be heightened when you look at an REIT which is listed. Okay, you might ask, can an REIT enjoy the tax benefits without listing? The answer is no, because the law and the regulations require the REIT to actually list within 2 years from the time it invokes or avails of the tax incentives under Republic Act 9856. That being the case, even its corporate governance will be reinforced and improved by way of compliance with the mandatory disclosure obligations for all publicly listed companies for the benefit of investors. And this added transparency would be very attractive to both local and global investors as compared to a structure where you have a vehicle which is, even if you say it's widely held, is not listed in the stock exchange. And finally, the vision of the sponsor in terms of developing the property, in terms of increasing the value of the REIT company is retained simply because the sponsor can opt to hold 2/3 equity ownership in the REIT and publicly offer the remaining 1/3, right? So at the point in time when they actually contribute the REIT into the REIT, the property that is to be the income producing and income generating real estate, the sponsor at that time owns 100% of the REIT company. That is why within 2 years, it is required to divest and to dilute its ownership to the extent that at least 1/3 of the equity of the REIT is distributed via a public offering. And the fact that the sponsor is still there, it still has skin in the game, allows the sponsor to continue managing the real estate investment trust assets through the fund and property managers, subject to the independence requirements prescribed in the law, which we will also discuss in a little while. Bird's eye view of the regulatory framework, you should be looking at the REIT Act, Republic Act 9856, the implementing rules and regulations issued by the Securities and Exchange Commission, January of 2020, the Bureau of Internal Revenue regulations dated 2011 and 2020, as well as the PSE REIT listing rules as amended early this year. A snapshot of the requirements is presented in this slide. The minimum paid up capital requirement should be 300 million pesos for the stock corporation. The minimum public ownership, which we've already discussed, will have to be at least 1/3. With respect to the board of directors, there has to be at least 1/3 independent directors, not less than 2 with respect to the board of directors of the REIT company. Transparency in terms of compliance with respect to the mandatory disclosure requirements and continuing listing requirements. In fact, we will have a very unique requirement for an REIT company pertaining to the domestic reinvestment policy. And the domestic reinvestment policy will be monitored by the stock exchange via the mandatory disclosure requirements of a REIT company. Now, again, the transparency requirements would be covering both the structured and unstructured reports for a publicly listed company. And the 3-year track record, if you would take a look at the 4th bullet point on this slide, generally the 3-year track record requirement is implemented and enforced at the entity level, subject to certain exceptions. For an REIT company, however, the track record may inure or may actually be attendant at the asset level. And that may be invoked by the Real Estate Investment Trust, which is newly formed for purposes of complying with the 3-year track record of profitable operations for listing purposes. And the dual regulatory framework would still be in place, whereby the self-regulatory organization in the person of the stock exchange would be the primary regulator subject to the oversight functions of the Securities and Exchange Commission. Again, what properties would qualify to be held by an REIT? Well, the real property provided for under the law in the Civil Code, Article 415, pertains to actually a wide array of real properties, which could be by nature real properties, and there are also real properties that are deemed to be incorporated into the real estate so that they also partake of the nature of a real property. Okay? Now, the real property, for example, could be a land, could be a structure where there's income being generated regularly. It could be, for example, an airport facility. It could be a tollway. It could be a hospital. It could be a mall. Or in other markets, earlier, Mr. Martin Shia mentioned data centers and all other developments driven by technology could potentially qualify as a real estate or real property. The track record should be at least 3 years, even at the asset level. And when we talk about investment in real estate, traditionally, an REIT would have direct ownership over the real property. Alternatively, shareholdings in a domestic special purpose vehicle, which vehicle is constituted to hold or actually own the real estate, would also be compliant with the requirement to hold income-producing real property or real estate. Another requirement is for the real estate to be acquired, and these shall be free from encumbrances or liens, except in relation to loan facilities. And finally, real estate acquired must be insured for their full replacement value pursuant to the implementing rules and regulations. Now, if you may ask, what about property development? Can an REIT undertake property development? In general, the answer is no. The REIT company, which is to be listed, is not allowed to undertake property development, regardless of whether it will do it itself or via a joint venture agreement, or even by investment in an unlisted property development companies. By way of exception, however, you would see on the screen certain instances where the SEC and the PSE would allow an REIT company to pursue or to hold interest in companies which are engaged in property development. Among which, if the company intends to hold the developed property for at least 3 years from the date of completion, there is that holding period requirement, then they could be allowed to undertake property development. Or if the purchase agreement with respect, for example, to the underlying real estate or even investment agreement is subject to conditions such as the completion of the building with a proper cover for construction risks. And the other requirements are as well flashed on the screen. But just want to highlight that the total contractual value of the property development contract should not exceed 10% of the deposited property of the REIT to be compliant with regulations. With respect to the dividend policy requirements, the requirement is again, minimum of 90% annual dividend declaration. Dividends can be in the nature of cash, stock, or property. Now, if they want to declare 100%, then it is their prerogative. It's a business judgment of the REIT. What about restrictions or appropriations to the retained earnings? The requirement under the law and under the implementing rules and regulations is that if there are to be restrictions, these will have to be with the approval of the majority of the board of directors, plus the unanimous vote of the independent directors of the board of the REIT. Provided again, once those special purposes have already been accomplished, then the retained earnings appropriations should be removed so that the retained earnings would already be available for purposes of dividend declaration requirements. Again, we mentioned among the tax benefits enjoyed by an REIT company would be that it can invoke additional deductions for the computation of taxable net income pursuant to the REIT Act of 2009. And this is really the implementation of that provision contained in Bureau of Internal Revenue's Revenue Regulations 3 series of 2020. And you could see on the screen that the dividends paid would constitute an additional deduction other than the allowable deductions from gross income to arrive at the base at which will be the base for your 30% corporate income tax. Right? So this is actually a very significant tax benefit to an REIT company, which they will be able to continue to enjoy, provided that they comply with the SEC and the PSE listing rules and regulations for an REIT company. Otherwise, there could be tax assessments that would be issued by the Bureau of Internal Revenue together with not just the base of the tax incentives availed of, but also interest surcharges as well as other penalties. Other tax considerations that we've already discussed, I just like to highlight the third bullet point, which says that there has to be a reinvestment plan together with an affidavit of undertaking to list within 2 years from the initial availment of the tax incentive for the REIT to invoke the benefits under Republic Act 9856 as well as the implementing rules and regulations. What is the reinvestment plan, you might ask? This was born out of our discussions with the Department of Finance, who posed the question, what's in it for the government or for the Philippines, given that there are very significant tax benefits given to the REIT? And so the solution, as well as the requirement in order to as well make sure that property development as well as capital market development domestically would be possible was to require a reinvestment plan or a domestic reinvestment policy. Now, under Section 8 of the PSE listing rules, the domestic reinvestment policy requirement provides that sponsors and promoters which transferred income generating real estate to the REIT must reinvest in real estate and or infrastructure projects located in the Philippines within a period of 1 year, non-extendable period of 1 year. Now, the proceeds realized from either of the two transactions. Number one, the subsequent sale of REIT shares and other securities issued in exchange for income-generating real estate transferred by the promoters or sponsors to the REIT. Now, this letter A actually pertains to the proceeds whenever in an IPO for an REIT, there would be the secondary offering by the sponsors and promoters. And necessarily so, there will always be a secondary offering because prior to the REIT listing, the 100% ownership of the sponsors and promoters is there, and it will have to be diluted via a public offering. Therefore, the dilution will come by way of a secondary offering during the initial public offering. And so what letter A pertains to would be the proceeds from the secondary offering that would then go to the sponsors and promoters being covered by the domestic reinvestment policy. There has to be clear plans monitored properly to the end that they will be devoted to domestic property development or in order to defray, for example, the cost of completing a project subject to the requirements of the law for purposes of domestic reinvestment. So that's letter A. Letter B pertains to the sale by such sponsors of any income-generating real estate to the REIT. And what this is about is what Ms. Carol Mills mentioned earlier. For example, you already have an REIT company, and throughout the life of the REIT company, there would be additional properties that are acquired or transferred to the REIT company, for example, let's say by the sponsor or promoter. So while it is a related party transaction, this nevertheless would increase the value of the REIT, and there is a corollary responsibility and requirement on the part of sponsors and promoters to make sure that whatever proceeds they derive from the transfer or sale of such income-producing real estate to the REIT will also be subject to the one-year domestic reinvestment policy under the regulations. These are again incorporated already in the REIT listing rules. And again, we are also cognizant of the requirement and of the mandate that an REIT shall not invest in real estate located outside the Philippines without special authority from the SEC. The answer is yes, they can invest outside the Philippines subject to special authority from the SEC. And again, I already mentioned the one-year period within which the domestic investment requirement has to be complied with. Otherwise, the listing procedures will be initiated against the REIT, and we also incorporated in the regulations that whenever there is a delisting of an REIT, the mandatory tender offer will have to be pursued for the benefit of the minority investors. And finally, an REIT shall submit on an annual basis an SEC certification of its compliance with the reinvestment plan requirements. Now, just to recap, the domestic reinvestment policy, who are the parties that will be covered? Well, again, sponsors, promoters who transferred income-producing real estate to the REIT at the point of incorporation prior to the public offering, so that when they eventually sell in the IPO via secondary offering, they will be required, mandated to comply with the domestic reinvestment policy. Now, a question that always arises is, what about if there are parties who contributed cash other than real property? What if they participate in the secondary offering in an IPO? Will they be covered by the domestic reinvestment policy? Based on the wordings of our regulations, they will not be covered simply because they are not parties who transferred income-generating real estate to the REIT, in the sense that when they subscribe to the shares of the REIT company, they actually contributed cash by way of subscription. Therefore, funds that invest in an REIT before the public offering can participate in the secondary offering and would not be covered by the reinvestment policy requirement. With respect to the transactions covered, we already discussed that secondary offerings as well as bilateral transfers to the REIT during the life of the REIT would be covered by the domestic reinvestment policy requirement. How to monitor this requirement in terms of compliance? The rules require that there will be a quarterly investment report, and at the end of 1 year period, a consolidated or a final investment report certified by the Chief Financial Officer, the Treasurer of the sponsors and the promoters covered by the requirement, as well as an external auditor. They all have to sign off on the reinvestment reports quarterly and on the last consolidated report. And again, there are also structured reports such as the annual reports and the financial reports that publicly listed companies are required to submit. And these reinvestment plan updates will also have to be provided for in the notes to the financial statements contained in the 17A submitted by the company. Without prejudice to 17C requirements or the unstructured reports for material non-public information provided for under our existing disclosure rules. The fund manager is also a significant participant in an REIT, and they could be duly licensed by the SEC or the BSP. And essentially, the fund manager executes the investment strategies and coordinates important decisions such as property acquisition, property management, leasing, even financial reporting, and asset disposition plans. Now, the requirement is for the fund manager to be independent of the REIT. Does that mean that they cannot be connected or they cannot be a related party of the REIT? To answer that question, let's take a look at the requirements of independence. Now, the regulations provide that independence of the fund manager is complied with whenever the majority of the board of the REIT fund manager are independent directors, at least one of whom will have a working knowledge of the real estate industry, fund management, corporate finance, and other relevant finance-related functions. That's the first requirement, to be independent. And secondly, the directors, including the independent directors of the REIT and its sponsors, promoters, cannot jointly occupy more than 49% of the board. Therefore, provided that the fund manager is an independent corporation compliant with these twin requirements, the fund manager could be a related party of the REIT, but nevertheless, from a regulatory perspective, would still be considered independent. And this also pertains to the commercial objectives to make sure that the vision of the promoter is carried out, in this case by a related party, the fund manager. Of course, the REIT is also free to engage a non-related fund manager that complies with the independent requirements of the regulations. Now, there's also a second important participant in an REIT listing, that's in the person of the property manager. Essentially, the property manager is the company that's responsible for managing all the aspects of the real estate properties of the REIT, pertaining to leasing, pertaining, for example, to the tenant administration, and all other aspects of the real estates administered by the REIT. Now, again, similar to the fund manager, they are required to be independent of the REIT. And the twin requirements are as follows. Majority of the board, the REIT property manager, should be independent directors. At least 2 of the directors must have working knowledge of the real estate industry. And the second requirement, the directors of the REIT and its sponsors, again, cannot occupy or could not actually hold more than 49% of the board of directors of the REIT property manager. Again, you would probably note that this is similar to the independence requirements for a fund manager. The other regulatory requirements I'd like to highlight before we close the presentation will be the property valuer. Very important that the property valuer is accredited by the PSE and also complies with the independence requirement under Rule 9 of the REIT Implementing Rules and Regulations. Okay. Another important nuance of an REIT listing is there would be eligible brokers who could actually take orders during the IPO and who could transact and trade REIT securities. This is a requirement to ensure that the trading participants not only are operationally ready, but are also able to properly appreciate the nuances of an REIT and inform their clients accordingly of the peculiarities of REIT securities. And finally, the compliance with the NOCD or the Name on Central Depository requirements under the PSE REIT listing rules by the eligible brokers will also have to be in check. The NOCD is nothing more than a recording all the way up to the beneficial owner level. Other than the REIT, we also have another asset class which is required to be registered at the NOCD level, and that pertains to the dollar-denominated securities in the Philippine Stock Exchange. Outside of the dollar-denominated securities and the REITs, all other shares in the PSE are actually at the trading participant level and not at the beneficial owner level. And this allows the beneficial owner to track their investments on a real-time basis and to get reports directly from PDTC to make sure that their risks are properly managed with respect to their investments. So there you have it, the REIT regulations for the Philippine Stock Exchange. We hope that this would be a very interesting next couple of years for us. We've waited 11 years for the REITs, and finally it's here. And we in the Philippine Stock Exchange are open for business, and we look forward to working with you as issuers and with other participants to make this dream a reality, and hopefully for the capital markets and the national economy to benefit from this new asset class offered by the Philippine Stock Exchange. Thank you again for your time.
Thank you, Sir Ruel, for the refresher on the amendments on the REIT listing rules, and more importantly, for discussing the benefits to our potential REIT issuers. In this session as well, we want to announce that the PSE now has the PSE IPO Listing Assistance Program, which extends to REIT listing applicants as well. The program aims to provide easier and guided access to potential listing applicants on the process and criteria of the IPO applications. The said program has three components. First, and most importantly, is the free hand-holding guidance to clients via one-on-one advisory sessions to potential clients on the process and criteria of IPO and REIT listing. We are also extending a free access to pre-application assessment tools for better evaluation on the REIT and IPO listing application readiness of the applicants. And lastly, the program extends free assistance in connecting potential clients to experienced financial advisors to ensure a well-guided listing application journey. Fast-track your growth through IPO and REIT listing. And to learn more about the program, please email marketingservices@pse.com.ph. And with that, we are now opening the floor to our roundtable discussion for your questions. May I request, please, the panelists to open your camera. For Bank of America, we will be joined again by Mr. Martin Sia, Singapore Country Head. And with Martin is Mr. Antonio Puno, Head of Southeast Asia Corporate Finance and Head of Philippines Investment Banking. For REIT, we are requesting again Ms. Carol Mills to join us for the discussion. And of course, for the Philippine Stock Exchange, Attorney Roel Refran will be joined as well by Attorney Maximo Sison, Legal Officer. We are now opening the floor to your questions. The first one is actually for Bank of America, and I would like to address this question to Mr. Martin. As an issue manager for REIT offerings in various markets, what are the typical challenges that potential issuers or property owners encounter in setting up a REIT?
Thanks, Pauline. Given the diversity of the various REIT markets, in Asia Pacific, I think typically the issuers or the sponsors of a REIT listing, I think the most important question is what are the assets that they want to inject into the REIT, and what are the assets that they want to retain as a pipeline. So this is one of the most, I would say the most critical considerations. because in certain in the markets, it's not so straightforward, whereby there could be in terms of joint ventures. So certain issuers might own a building with a joint venture partner. So the REIT sponsors may want to put the in terms of assets into the REIT, but the joint venture partner is not prepared to do so. And also when it comes to legal titles, I don't think that's the case in the Philippines, but in other markets, when it comes to legal titles on the property ownerships, it's usually a very big consideration for the issuers. The second main considerations would be on the on the valuation of the portfolio that the sponsor would like to inject into the REIT. I think these two considerations are centered on the key construct of the REIT, and that is on the transparency and the resilience of the underlying in terms of real estate cash flows. So once we get these two in the foundation right, the assets that the issuers want to put inside the REIT, the assets that the issuers want to retain as a potential pipeline for the REIT post-listing, I think it boils down to picking the best portfolio that can provide both transparency and also resilience of cash flow to the REIT investors.
Thank you for those insights, Sir Martin. A lot of questions coming in, and the second one I will forward to Ms. Carol. Ms. Carol, what was the greatest challenge in getting a REIT set up to go to market, and what advice would you offer to those who also plan to do a REIT listing?
Thanks, Pauline, for that question. For me, the greatest challenges we encountered was working when the rules were still constantly evolving at the time. And so my advice is there's really no perfect time to launch a REIT. If you believe in REITs as an investment product and you can structure it properly, you have good assets to infuse, and you have the commitment to execute and grow the REIT, then I would advise that you go for it.
Thank you, Ms. Carol. Again, this is addressed to Martin of Bank of America. Another question for you, Mr. Sia. What has been your experience of the price performance of REIT listings in Singapore and other markets? Does the eventual listing price show an appreciation over the offer price after a certain period of time? What do you attribute these price movements to?
Thank you, Pauline. It's very interesting to note that the first REIT IPO in Singapore was completed around the 2002. So 2002 was a milestone for Singapore economy because it was the first time the Singapore economy went into a recession post the independence from the British government. So the first few REITs in Singapore, the share price did not perform or did not trade above the IPO price for a sustained period of time. So I think the focus for the REIT investors is always to make sure that you do your work to understand the cash flows of the REIT, the asset of the REIT, and also importantly the sponsorship of the REIT. The sponsorship of the REIT, the track record of the REIT sponsor in terms of managing their properties, managing their tenancies, because the cash flows of the tenants are the most important in terms of construct of the REIT. So over time, the REIT share price performance should reflect the underlying cash flow, resilience, and also transparency of the underlying real estate. And we have seen the performance of various first REIT listing in all the various markets here in Asia Pacific. Some of the first REIT listing has had to go through a period of time before their share price, in terms of normalized. But that's usually on the back of a few quarters, of financial and also in terms of operating performance disclosures. So give the REIT some time for them to report their financial results post listing. And the fact is that in the near term, the share price performance should reflect the underlying transparency and also the cash flow resilience of the REIT.
Thanks, Martin. That's a good advice for potential REIT issuers, hopefully, after this session. And for the fourth question, I will assign it to Attorney Ruel. Sir Ruel. Under the REIT law and IRR, can leased properties be included in a REIT? If yes, are there specific regulations or requirements on leasehold properties as part of the REIT? Is there a requirement on the minimum number of years for the lease to be part of the REIT?
Leasehold properties are covered by Republic Act 9856, including the implementing rules and regulations. In fact, particular emphasis would be on Rule 5, particularly Section 1.1, which provides for allowable real estate investments, which include leasehold property. Of course, the default would always be the ownership of the title itself, the legal ownership being vested in the REIT. But the law does also allow for a structure where you're actually deriving the lease rentals, and those are inuring to the benefit of the REIT. And you could structure that legally in a way that the income actually is flowing into the REIT to comply with the requirements of the law that income generating real estate be among the deposited properties of the REIT. Are there minimum requirements or regulations? The disclosure requirements to ensure that the structure is fully, completely, and accurately disclosed in the offer terms and in the documents that are used during the public offering will have to be faithfully complied with, to the end that the investors know the risks. Particularly if it's a leasehold property, it would expose the investors and the REIT company itself to a different set of risks, as opposed to the risk attendant to a REIT which actually owns the underlying real estate. So the risk factors, as well as the mitigating factors that the company would employ to hopefully minimize the risks in a structure where you have a leasehold instead of the legal title being owned by the REIT company. Now, again, the requirement that we will have for purpose of listing would be at least 3 years track record in terms of the lease rentals being generated by that real estate property if you are to invoke the track record at the asset level in that scenario.
Thank you, Sir Ruel. Another interesting question for Ms. Carol. Is REIT considering including in the future in its portfolio other property types aside from office buildings? Can you describe the process that the company takes in evaluating what properties to add in the future?
Yeah, so a REIT is basically a commercial REIT, and so it can own offices, malls, and hotels. Currently, our properties are mostly office buildings because of the stability of the sector at this time. But eventually, as malls and hotels stabilize, then a REIT can also acquire such types of properties. And we have basically 4 investment criteria. One is a stable occupancy, and this means not only high building occupancy, but high quality tenancy in place, long-term leases, contracted escalations, and we chose assets that have good quality tenants, no POGO tenants given the uncertainties in that sector, and our weighted average lease expiry is long, no more than 6 years. And secondly, prime location, of course, aside from Makati, other CBD locations in Metro Manila and in Cebu, which is a good expansion site for BPOs in the country. And third is substantial remaining useful life. Right now, our buildings are all fairly new, so our buildings have over 30 close to 35 years useful life, not subject to any major renovation and immediate redevelopment. So our shareholders can rely on that continued income from our buildings. And ultimately, of course, the most important is that the acquisition should be yield accretive to our shareholders. And as I described earlier, we acquire properties that would incrementally add to the current dividends to our shareholders.
Okay, thank you for that advice, Ms. Carol. The next question is for Bank of America, Martin. Given the growing demand locally for internet connectivity during this pandemic, is there a cellular tower company in the region listed as a REIT?
The fact is that in certain markets, say for example in Singapore, there's fiber optics, broadband in terms of business trust, and in Hong Kong, likewise, the fixed line in terms of business trust. So yes, there are certain the communications infrastructure that are listed in Singapore and also in Hong Kong, as a quasi business trust. So yes, there are in terms of such precedents, and such sector classes are actually performing very well given the demand for communications and also for in terms of internet access.
Thanks, Martin. And again, sir, you are in demand. Attorney Ruel, I think the applications will come in right after. There's a question for Attorney Ruel. Do REIT fund managers not related to the REIT or its sponsors have to comply with the requirement that a majority of the board members of the fund manager be independent?
If it is not a related party, in the sense that there are no interlocking equity ownerships, then I believe and that would already be compliant with the independence requirements, because the two requirements appear to be base requirements, but if you are related parties, then you have to make sure that you comply with those two. But to be safe, I would always say not only equity independence, but also on the level of the board. I think because I mentioned there are twin requirements, right? Number one is that the majority should be independent, and that will still be complied with, will have to be complied with regardless of whether it's a related party or not. And again, if with respect to the second requirement, if it is not a related party, then that 49% limit would not be applicable, right? Because there are no interlocking shareholders. Therefore, if you are a totally independent party, then all you have to comply with will be the independence requirement. I think it's good for the property and the fund manager per se, regardless of whether they are related parties, because you're able to also demonstrate, again, subject to qualifications that you would ask for your independent directors. No? So we don't have yet an actual base case for that. I think the jury is still out, simply because if you look at the wording, it appears that those twin requirements would be more applicable in the sense of related parties. No? Now, on the topic of related parties, we'd just like to highlight that the implementing rules and regulations require certain disclosures. The question earlier was about leaseholds. Normally, that would be by virtue of related party transactions. So normally, for these transactions, you need to have majority of the board approving the transaction, unanimous approval as well by the independent directors. Terms of the lease will have to be disclosed. A related party committee will also have to sign off on these transactions. So all of these requirements for related party transactions will have to be complied with.
Okay, so thank you for that. Another question, but this time addressed to Mr. Antonio of BOFA. Hi, Mr. Puno. So given the diversity of REITable assets in the Philippines, does it make sense to establish a REIT owning multiple type of assets? For example, there are several existing or planned integrated developments in the country that contain residential, commercial, healthcare, and leisure assets. Will it be more attractive to offer that integrated development as a REIT?
Thanks, Pauline. I think what we've seen over the past few years around the region is that the concept of mixed assets or multiple asset classes within a REIT is something that investors have started to embrace. I think at the bottom of every transaction that we look at, it's always asset quality. So there's a theme around the integrated mixed-use assets that drives the underlying cash flows and makes sure that those cash flows are consistent and stable. Then I think investors will take that view that an integrated REIT or a mixed-use REIT is a much better proposition than a mishmash of other asset types that are not nearly as good in terms of quality of tenancy and cash flow. So bottom line again, we've been involved in a number of mergers where you put, for example, hospitality REITs with commercial office REITs or commercial office REITs with industrial REITs, with the main tenant being the quality of cash flows can be assured. And there's an underlying theme where the tenancies have synergies amongst them.
Okay. Mr. Puno, another question in line with the previous question. For a hotel operating group that also owns the real estate of the hotels that it operates, will it be acceptable for investors if the group separates the real estate assets from the hotel operations with the real estate assets to be set up for future REIT listing?
Yeah, no, thanks for the question, Pauline. That's a very good question. If you look at hotel assets, the one key difference with hotel assets and office assets or malls, for example, is that your tenancies are by definition daily. So you can have your occupancy move from 0 to 100 to 70 to 80 on a daily basis. And therefore, what we find typically in other markets is that you would have the hotel operators separately, and there is a lease contract, which you would call a master lease, where the sponsor essentially stands behind the tenancies of the hotel. So to answer the question, yes, and there are different templates that have worked in the past for specifically for hospitality assets.
Okay. The last question, and comes out very timely. I would like to address this again to AREIT, Ms. Carol Mills. Ms. Carol, what are the insights that you can share in terms of developing AREIT's reinvestment plan, considering the growing ESG concerns and the post-pandemic scenario?
Okay, thanks, Pauline, for that question. So for AREIT, basically, we mirror Ayala's environmental, social, and governance initiatives. No? On the environment, like Ayala Properties, AREIT is moving towards carbon neutrality. Solarius, one of our buildings, is currently using a renewable energy source for its power. And now we are shifting one of our biggest buildings, Ayala North Exchange, also to renewable energy. Our building in Cebu is a LEED Gold, and we are also securing a LEED certification for Ayala North Exchange. And our properties being Ayala developed, we give very high regard for open space as landscape areas. And despite being high-rise buildings in Ayala North Exchange, we have a 2,000 square meter open civic space in our building podium. So we value these things as Ayala's developments. Now, similarly, in Cebu, we have a roof deck garden, and all our buildings use low heat emission glass for energy conservation. So our offices are located in mixed-use developments. We provide convenience to office workers, access to public transportation, and overall that work-life balance. On the social component, through our BPO and office locators, AREIT contributes very much to job generation and attract many foreign companies to locate and invest in the Philippines. With the 5 buildings in AREIT, including the future acquisition of the 30th, we have over 50,000 Filipino employees working in our buildings, and mostly very young, prime age of 20 to 35 years old, future workforce of our country. And of course, as a REIT, as mentioned earlier, we contribute positively to social and economic growth. Ownership of commercial real estate is more democratized, being made available to more individuals, more Filipinos, and with a clear reinvestment plan in place for our economy. And lastly, for corporate governance, AREIT's policies are not only aligned with Ayala and other publicly listed companies, but very consciously abiding by the REIT regulations as detailed by Attorney Roel earlier, and detailed public disclosures as well. As I mentioned earlier, the independence of our property and fund management companies were set up such that majority of the members of the board of the PM and the FM companies are independent directors, and that all related party transactions are at arm's length. It requires the approval not only of the respective RPT committees of these management companies and by AREIT, but require the unanimous vote of its independent directors, keeping in mind the interest of our minority shareholders.
Thank you, Ms. Carol. We appreciate the insights that you shared, especially for potential issuers in crafting their reinvestment plan. Thank you as well to all our panelists for answering our questions and sharing your thoughts. Indeed, this has been a learning experience. To those who still have questions, again, please email us at marketingservices@pse.com.ph. And with this, I call on back Attorney Roel for the closing remarks.
It's been a very informative session. I hope for everyone, myself included, listening to Martin and Oti from our allies in this long drawn out project. Thank you very much to both of you. Of course, to Miss Carol Mills, who has worked with us on this on the maiden offering, not just of REIT as an asset class, but also stress testing our rules. Thank you very much also. And to all the participants, we are very appreciative of your participation. And really, our ending goal here for purposes of this presentation is to be connected with everyone on a concept that is very important, especially during these times. REITs being a yield play, providing for alternative opportunities, not just for investors, but also as well for issuers. So that, for example, for the investors themselves, rather than owning the income-producing real estate, which is not just very expensive, high carrying costs, a lot of tax implications, also estate tax planning purposes might be problematic. I think the proxy to that would always be investing in a REIT vehicle duly listed in the PSE, like, for example, a REIT. And I also believe that the upside potential of the REIT industry here, as Martin mentioned, comparing to our peers, I really hope that we see the light of day, and hopefully we would be a partner in your journey. More and more REIT listing for us. We are open for business. The rules will never be, are not static. We will have to adopt, and we will be guided by what's happening in Singapore, what's happening in other parts of the world, Australia, in the US, because we never want to reinvent the wheel, but all we want is for us to be a viable investment destination, not just for the domestic REIT companies, but also hopefully we would see hopefully a cross-listing of a REIT that is listed in other markets, and that's really in all sincerity, in all passion. I hope that we would see that also, a cross-listed REIT, and eventually hopefully an REIT index, so that the other participants can also create new products out of an REIT index. So as I said, we can go on and on about our dreams and our vision for REITs as well as for our market. And I think we all have skin in the game. Pare-parehas ho tayo. We all have our future to take care of. And we hope that we would be together in accomplishing all our dreams and our vision for the capital market. So as a final point, our listing assistance program has already been introduced by PAO. And please do not hesitate to reach out to them, to the extent that we could hopefully address preliminary questions that you may have. Of course, your financial advisors or underwriters would be in the best position to give you the details, detailed advice as well as suggestions. But we would be here to also hopefully address regulatory issues to the extent that we can, to make your listing journey less stressful, no? And that was our objective, Carol, to make sure that it's not stressful for the issuer outsource the stress to us in PSE. We are here, and that's our job, no, to take care of all your questions, and hopefully we will have many more REIT listings to come. So thank you very much again, and maraming salamat po to everyone.
Again, thank you for taking time this afternoon to attend PSE's first REIT SMART webinar. We hope that you were able to gain valuable insights and strategies from this session. For any additional inquiries, or if you are now ready to start your REIT application journey, please book your consultation with us by sending an email again to marketingservices@pse.com.ph. We are also inviting you to the next REIT SMART webinar second session on November 17, entitled The Path Forward for the Philippine REIT Market. Again, from the Philippine Stock Exchange, Inc., thank you and enjoy the rest of your afternoon.